Whoa. What's up, Jolene?
What's going on? I had to switch audio.
Well, it's going to be a very much so interesting day. I just want to
Okay.
say that. I'm you never know what's going to happen today. I just want to let you know that.
I mean, it is the last day of Black History Month. Even though Black History is year round, it is like, but
I
I
mean,
feel
we
like,
live it every day.
I know, but I feel like we need to, I mean, you're Black, but we need to like add it, increase the Blackness. Don't you think?
I think we just
At
need to
some point,
increase it all today. So
okay.
I think we're going to definitely turn it up today, but let's get some of the formalities out of the way, right? Should we?
Yeah, but let me see what your shirt says first.
Oh, shout outs to, the tribal chief out here,
Okay.
God mode, greatness
Mhm.
on a different level.
Oh,
So it should be, it's going to be a good day. When I wear this shirt, I feel
mhm.
so empowered because I feel like something is going to happen. But, I may have another thing up my sleeve. But, before we get into all that, what's good, everybody? I am Mark Monroe, accompanied by my wonderful co host, co producer, co creator, and all things galactic. Give it up for none other than the wonderful.
Yo, it's Jolene GC in the place to be. What does it, cousins, on this fine Tuesday?
Yes, and welcome to the Come Up series. If you're new, go ahead and like, subscribe, and throughout the show, feel free to comment down below if you have questions. We can always check back in and fill out those questions, or make sure you hit it up in the chat. Tell us where you're coming from today. As
Mhm.
Jolene has said, today is technically the last day of Black History Month, but not Black History Year because we out here 365 days a year,
All
sometimes
day.
366. So we out here. But we'd be remiss today because we felt like we wanted to do something very special for y'all. So without further ado, go ahead and cue that intro for me. All right. So today, y'all, it's going to be a little bit different. I know that you guys are always expecting us to give you something for executive education. And don't worry, we're definitely going to do that. But I think that we would be a little bit remiss if we didn't add a little bit more to the flavor today. Right, Jolene?
Yeah.
All right. So, I'm just going to, make a little bit of a wardrobe change real quick, because, this is going to be on some galactic stuff here, Jolene. We out here facing multiverses. And so
Okay.
we got to bring in some other superheroes because, it's a whole new phase out here. So pandemic is over. So I feel like we're in like phase 2, phase 3.
Okay.
So, you know,
Hello.
yes.
I can't.
So, I think it's time that essentially that we let folks know, okay, I think it's time to assemble the Financial Avengers. So, without further ado, let's go ahead and bring some of the family in the room so that way people can understand what kind of heat we're coming in. Oh, wow. Okay. Okay. All
Oh,
right. Okay. Okay. Who else we got? All right. That's what I'm talking about. Okay. The champ is okay. All right. All
hello.
right. All right. What does it, cousins? How y'all doing tonight?
What's
Doing
happening?
great. What's
Hello.
good? What's going on?
Hey, hey, hey.
Oh man, tonight I feel like, it's gonna be pretty legendary. First things first, I definitely want to send a huge shout out to Lawrence, who definitely has been killing the game on Mondays. And then of course we gotta give it up to Mark and Mo, who have definitely been rocking the mics on Thursday
Hey,
for
hey,
Money Market
hey.
Truth. So think about it. We got Money Night Take, we got Money Market Truths, but we got some other people in the room here. And then of course we got the elder statesman, the wise man, of course. Give it up for Uncle Charles in the building, ladies and gentlemen.
Thank you for having me.
blessing us tonight. And then, of course, we got some other people in the room. For example, we got none other than our financial advisor, Mr. Christopher W. Bush.
Hey.
And of course, you can't be. It's like with financial advisement, you also have to come forth with them taxes and that accounting. So we got to see how that's running. So, of course, give a shout out to our cousin Abby Joseph in the building. And then, you guys have it's kind of weird, like in this kind of sense, because he hails from the same world in which that we come from. We come from the machine world where startups are built, that grit and everything else. So who else to bring to the table than none other than the brain, aka Mr. Brian Clyett. Ladies and gentlemen, welcome. All right, so we got a lot to get into. So Uncle Charles, we've been having some conversations lately, and I think I've been having conversations with all y'all throughout like last year and also going into this year. Family, y'all got your water? I want to make sure y'all got your water. Like, is everybody like ready to be hydrated and everything else? We can't have nobody getting dehydrated on the live. Okay, so we're here. All right, so we got a lot to get into. We got to talk about, culture. We got to talk about the state of finance. We got to talk about the state of markets. We got to talk about planning and financial advisement. So Uncle Charles, and we got Uncle Charles here, and he's definitely going to help us set the room, because with a lot of personalities in the room, you need wise advisement and counsel. So Uncle Charles, how do you think that we should start here? Because, we need a pulse to get started.
Well, there's been a lot going on these past few weeks, Mark, and you and I have been having some very serious conversations about what's going on among the culture in the market, how people are being treated out here in this market. So I think, where I would like to start is, you and Jolene have done an awesome job, I must say, with this whole financial education thing, executive education. It's been wonderful. But I think where I would like to start, Mark, right now is more on the executive education side. Just give us an overview right now of where you think we are in this first quarter of the market.
Okay.
And then what to look for going into the second and third quarter of the market. We won't worry about the fourth quarter. That's way out. But I know Lawrence and Mark and Mo have all been talking about what they foresee, and we'll get their opinion also. But I'd like to start with you first, and then we'll go from there.
Okay. All right. So, and I hope that if you're at home, well, hopefully not like driving and taking notes, because that would be terrible. But wherever you're listening at, definitely make sure you take notes. But if you can't, don't worry. It's recorded. So you can always come back and listen and take your notes. And shout out to our cousins on LinkedIn, by the way. So I want to get that stuff out, get the orderly stuff out of the way. All right. So where are we at right now? So we just went through a terrible 2022 in the stock market for equities. But then we also have to look at it as it pertains to the financial health for a lot of companies. And so I think as we were in 2022, there was a lot of speculation and there was a lot of thought process that as the cost of capital goes up, the health of a lot of those companies really goes under scrutiny. So which means that you really have to question those earnings. And especially in a market where you see that the Fed starts tightening on monetary policy, as well as raising rates to fight off inflation, that really hits a lot of companies. Now, where are we at today? I think that a lot of companies have taken their medicine. I still think that we're in that phase where don't be expecting record-breaking blowout earnings from a lot of the companies. I think that what you should be expecting is, pretty much, if you're looking at earnings per se, expect either slight beat or, average beat or slight miss. Or you could possibly also hear, for some companies, you could also hear a terrible miss. A lot of companies that walked in at the end of 2022, the bar was set very, very low as it pertains to expectations. And I think that I can probably say with a little bit of confidence now, I think that we're at, 74 to 77% of the companies in the S&P 500 that have reported. I think that they pretty much came either in line or, slight beats on their earnings. And then it comes down to this thing where we're looking at the guidance. So again, a lot of analysts that walked out of 2022 going into 2023, had their expectations, had their thesis put into place. Now, here's the interesting part, and I've actually had this conversation with Lawrence before, where now that those analysts have put out their numbers, have put out their targets for the next, let's say, 6 to 12 months. So now that you're starting to see earnings come through, we're now in this period where a lot of folks now have to chew on the data of what's in front of them. So what does that mean? So let's just say if I put a price target on a company like Apple for, let's say, over the next 6 to 12 months at, let's say, a 170 price target. Now I'm looking at, okay, hey, well, what is it that we're expecting from Apple? What does the economics say? Are there any potential hurdles that could ultimately hit the company as it pertains to cost per share? And then again, it's like the other part is, and you've seen it on Lawrence's show, where a lot of times people are looking at PE. So again, this is now the time where we're in the market where everybody's shopping for bargains. So they're looking for bargain companies that are strong, healthy companies that have definitely got clipped or definitely got shaved with everybody else because of the events that took place last year from the Federal Reserve and other economic, issues. So I think that we're now at this point in time where we're looking at it and saying, okay, hey, what's viable? What business is actually viable in this market and looking forward? And then on top of that, what companies can withstand if things get potentially worse for the market? Because there still is some of that speculation there. A lot of it's kind of like flushed out with the 2022. But again, it's like we're really at this point now where I think that everybody's now starting to accumulate good companies, and they're starting to separate the good companies from the rest of the herd. And I think that you're going to see that play out all the way. I think my trajectory going out to probably about May. And then I think that probably around May, so pretty much after Q2 earnings, you should kind of have an idea of where companies are specifically. So that's my take on it.
So Mark and Mo, I'm going to come back to you here in a minute. I want to go to Christopher Bush. I met Mr. Bush here in Atlanta back here last year, and he serves a particular type of clientele. And Chris, so can you just tell us a little bit about what you're seeing in the market as far as what your clients are asking you? I mean, you don't, of course, no personal information, but just an overall vision of what you can share with us, with the clientele of people that you are working with.
Yeah, I think it comes from a full aspect of what they're asking right now. It really depends on the type of client. Like when it comes to business owners right now, the biggest thing for business owners that when I'm speaking to them about their full financial plan is like, okay, Chris, we understand that this is going to be a 3, 5, or 10-year play when it comes to our overall portfolio. However, they're looking for seeing, okay, what can we do now in this next 1 to 2 years to adjust, right? We saw last year when energy and energy stocks and different, that was really the main sector that performed well last year for most companies. But what we found out is a lot of people, not just my clientele, but just in an industry, that they didn't have a lot of diversification in other outside of tech or outside of growth, or they didn't have a lot of value companies inside their portfolio. So what I'm really focused on for my clientele now is, okay, we did a decent job in 2022 managing the volatility, managing our risk. However, what we got to do better this year is making sure we have a lot better diversification, right? When I say that, I'm not just saying that we're going to be in 1,000 different companies, but we got to look at the sectors that also perform well during today's market, right? It's going to be a volatile market for the next, I would say, and honestly, until 2024, we're going to have withstand some type of volatility. So we need to make sure that we have assets in place that's going to perform well. Right. So that's what I'm looking at from a business standpoint. Then I would say from people that are retired, right? A lot of my clients are over the age of 55. They're looking, okay, what can we do to protect? What can we do to preserve the capital that we have? But also, I don't want to lessen my income that I'm getting on a monthly basis, right? I don't think we talk about a lot how to understanding, accumulation, all right, how to get to a 2 million, 3 million, $5 million in our portfolio, but I don't think we have enough conversations of us talking about, okay, now that we accumulated a massive wealth, right? Or maybe some of my clients are 55 or 65 years old. Okay, how do I start distributing income? right? What's the best
Mhm.
order? What account should I touch first, right? Should I touch my Roth? Should I touch my non-qualified accounts, right? Should I understand, okay, when should I touch my IRA? Go understand my pension. When should I take Social Security? So with the market volatility right now, we got to look at all of those things to how can we make sure that our income doesn't get affected during these volatile times. And again, I would say until 2024, like how are we going to manage that? So I think a lot of my clientele is that's what we're primarily focused on is income, preservation of capital, and making sure we're properly diversified in a market that's going to give us returns that's going to be kind of non-correlated with the market right now.
Thanks. That's pretty much what I thought, Chris. I mean, look, I'm at that point in my life where 4 or 5 more years I'm out of corporate America,
Yep.
and I'm gonna go sit on the beach somewhere and do nothing, well, something, but we'll figure that one out. But I want to go to Mark and Mo because you guys, when I look at your show and how you handle your show and your thought pattern compared to what Chris just said, kind of what Mark Monroe just said, you have a little different twist on how you handle your day to day and your week to week. So I'm going to go with Mo first because Mo, I want to hear from you. And if you had to say for the next 3 months, what are you going to concentrate on? And then Mark, I'm going to come to you and hear your twist on what Mo just said. Then I'm going to come to the Panther and Abby. And then Brian, I got something special for you.
Oh, Lord.
Let's go, Mo. What you got?
So from a trader's point of view, I would say you have to be very cautious with this market. We are in a consolidation phase. So a lot of this is algos taking out a lot of day traders. About 55% of volume that's coming into SPX every single day, it's 0 day. So if you don't know your levels and if you're not patient, you're out. So for me, the next 3 months is to monitor key levels and only trade when those key levels are broken. A lot of times what we're doing is we're looking for trend days, but the market's giving ranges. And when the ranges are really small, you want to stay out of the market. And how I'm looking at is I'm waiting and watching for the first hour in the market and then deciding if I want to trade that day. And I've never done that. I'll actually say this out loud. This is one of the toughest market I've seen in the last 4 years for day traders. In terms of what Mark Monroe said, it's clear we won't know anything till May. Right now, we're hanging out around the 200 moving average. So if someone's excessively bullish or excessively bearish, they will lose a lot of money because we can get killed within consolidation. And I'm talking options point of view. I'm not talking stocks. Stocks don't have data, just strictly option speaking. If you don't know the levels, the best part right now is to see if we hold the 200 moving average or if we bounce off of it. So the 4,000 level has been acting like a magnet. And this is where the CTAs, the funds, they're watching what the feds give us. And with the little information you have right now, I think Lawrence, Mark, they talk about vertical spreads. I think they're amazing. Selling premium would work in your favor at this point. But the next 3 months are going to take people that are great traders with bad traders out of the market. So just that's kind of what my point of view is. And apart from that, in my opinion, the pain, and I'm talking risk reward, the pain is on the downside. If we break the 200 moving average, that's the CTA sell level. I think that's when they're going to start selling and the FOMO will turn into fear. Quick example, we saw what happened with NVIDIA. I think it was 10 billion. Mark Monroe, I'm saying his full name because we have another Mark.
You can just call me M squared.
Okay. M squared knows that delusion is a joke. It's not a big delusion for a company as big as NVIDIA. But did you see what happened? It dropped, I think, the news just 30 minutes before the news. It dropped 8 points after the news, another 3 points. That news is not big enough. It's the equal thing when Apple said their demand is slowing down, which wasn't it was just a statement not backed up by good resources. What that's telling you the fear in the market and people with shaky hands. These aren't investors that are accumulating on big position. These are people that don't want to miss out the bottom, but when they see a bad news, they're just dropping. So that's sort of what I'm looking.
Okay, yeah, and that kind of plays into what Christopher Bush was saying about accumulation. Like I said, a lot of people are just in accumulation phase right now, and I understand that. So, Mark, Mr. Uncultured, in your theme of how you invest and trade right now. What are you looking at for the next 3 months?
So on the investing side, I continue to do what I've been doing, which is with full disclosure, I just invest into the SPY and the QQQ. SPLG specifically, the little baby sister of SPY, is where I invest into pretty much every month, usually during the fourth week or the third week, whenever I see like a massive pullback, then I buy them. And I also have a dividend portfolio where I invest into as well, individual stocks. But for the most part, I don't go heavy on anything because of this current sentiment.
Okay.
I still think short term we're going to be bearish overall. So I don't see no reason to continue to try to buy the dip. I feel like everyone's been talking about buying a dip for the past year and a half and eventually going to run out of money. I did not do that. I waited until I felt comfortable at certain levels. So I think people need to start strategizing and figuring out where they feel comfortable at buying. And if you have the money and if you're willing to buy 100 shares, to start doing cash secure puts, which I think is a great strategy, especially like if you think that Apple's going to go down to 130 and you're okay with buying at 130, start doing cash secure puts and at least collect that money. It may not ever go down to 130, but at least you have an opportunity to start collecting money on the trading side in short term. And I'd rather just wait to start actually dollar cost averaging in the shares I already have when I see a clear direction, not this FOMO environment, uncertainty. I'm just not a fan. Like I said, everyone's been saying buy the dip for a year and a half. I don't know why. I think a lot of people ran out of money. And I think at this point, it's just better to sit and wait. I'd rather miss the bottom and catch going up versus trying to continue to buy a falling knife.
Okay. Thank you for that. That's a really good synopsis there. I like that. So, Lawrence, my question for you is, now you've heard what everybody had to say. And the reason I'm going to pick on you, number one, you're the youngest on this platform, but I've seen how you move with the people that you teach. And I know you just got done doing a big event here this past week, with a lot of ladies. So what type of questions are you getting? And then what advice are you getting that you're giving to them right now on what to do for the rest of this year? Or if you just look at the next 3 months, how are you looking at the market right now?
Yeah, great question. So, for one, I would say that a lot of the questions that I've gotten is the bottom end. There was a lot of people that felt like there were certain stocks, hence NVIDIA and Tesla. And there's some other names as well, too, that people feel like they missed out on. So that's probably the number one question that I've been getting the past 2 months is, hey, did I miss this? Did I miss this? And I ultimately think that, none of us truly know the answer. So what Mark said, I think is so true. We've seen certain stocks come down, but they've came off of lows, but those could just be rallies from lows, right? Now, the things that I've been telling people, not just for this year, but I also started telling them this last year, but I'm reiterating it this year, is, hey, you may need to get an extra job, right? Because you increasing your income during this time period, right, is going to allow you to be able to have more money to invest in the spots that you like. So that's the number one thing. You need to have more capital. And that covers the point that Mark made. He said, a lot of people ran out of money. And that's a reality because I get the DMs, I get the questions, and I could literally see it, right? So what he's saying is very true. But you're going to need to be able to hedge your lifestyle, number two, right? Going into the end of the year, you need to be able to hedge your lifestyle, cut back on expenses so you actually have money to actually invest. And then also I will focus on areas of the market that have kind of been beaten down or ignored, because eventually those are the areas when institutions want to start picking at things, right? Has anybody noticed that Bitcoin and Ethereum are up over 50% this year? But yet I don't see that ran on CNBC. No. So my thing is that I'm telling people to focus on the areas that are not talked about. Focus on the areas that are quiet. I think you'll see a resurgence in IPOs. I know Mark Monroe has talked about SPACs in the startup world. We'll see some stuff. I'm excited for some new IPOs that'll be coming out soon. But I just think there's ultimate opportunity in this. The market contracted, so your dollars go farther in a down market. So I just tell people to focus on, if a stock was 400, but it's now 200, understand you can buy more of that stock at 200. And this is really just a long-term game. And, primarily most of my strategy when it comes to the trading side is selling options. I've pretty much probably everybody here knows that, I'm a big seller of calls on my portfolio. And then I love to do what the strategy that Mo talked about is selling cash secured puts. Because if I know I want to buy a stock, why not get paid for it? So that's my reality is, doing those strategies over and over again. When the market is trading choppy like it's been, this is just like beautiful. You just press a button and you sell an option, you come back at the end of the week and it's lights out. So for all the people that want to buy weekly options, I just tell them keep buying them because I'm going to keep selling them. That's bottom line.
Thanks a lot. Appreciate that. Now that kind of leads into Mr. Brian Collette. I was going to go to Abby next, but you kind of hit on something that's near and dear to Mark Monroe's heart, my heart, startups, VCs, IPOs. So Brian, in your world right now, what are you hearing? What are you seeing? What is the feel in the market and the thirst for new companies to start?
Right. So a lot of the panelists already kind of touched on this. In the tech space, especially with publicly traded companies, there's this focus on revenue and skewing more away from innovation. You kind of see that with Meta's strategy about charging people for the blue verified check, whereas previously they were spending $3 billion a year on Oculus. However, with that focus on revenue, they're now looking to kind of the startup space, and a lot of these large publicly traded companies are looking for acquisitions. So a lot of the innovation we're going to see over the next probably year and a half with a lot of these big tech publicly traded companies are going to come through acquisitions. We've seen that with Microsoft's acquisition, our huge cash injection of ChatGPT or OpenAI. Also, all investors, the thing that's keeping a lot of investors' tongue moist is AI. Almost all ideas that are getting funded have some component of AI, either generative AI. We're also seeing that this has really become an investor's market. What I mean by that, the past 2-3 years, startups that have kind of a full run. You can select who you want your GP to be, which fund you want to fund, to write your check. But right now, investors have the upper hand. They're taking a longer time for due diligence. They're shifting through more deals. They aren't as eager to pull the trigger and write checks. So they're actually being kind of selfish with their money, which, a lot of cash, there's a cash crunch. So I know Lawrence talked about, retail investors needing additional jobs for liquidity. We're also seeing that in the VC world. Right now in the VC world, if you look globally speaking, everyone's going to the Middle East. Pretty much the Emirates, Saudi, the Gulf countries are the only countries that are really truly sitting on true cash. If you look at Asia, you look throughout LATAM, North America, even Western Europe, everyone's kind of strapped with debt. So a lot of big VC funds out of the Bay Area heading over to the Gulf to get cash injections and looking to get some liquidity from those given markets. But again, everything's super driven by AI. Huge amount of innovation is going to be driven by acquisitions for publicly traded companies. That's kind of the pulse of the market at the given moment.
Thanks a lot, Brian. Yeah, that was a really good explanation, kind of what I'm seeing also. And I talked to you, talked to Mark. I kind of see what's going on out there. But we're gonna jump in, and Jolene, I'm coming to you too, because I got something for you. I've been kind of thinking about, knowing that you are the lady of leisure. But I'm going to jump into Abby right now. Abby, so we all know you are the tax lady. I don't know what better time is to have you speak right now, knowing that we are in the middle of tax season.
Yes.
And I've seen some of your posts, and one of the things that kills me is I can always tell when you had a client that did something that they shouldn't have done. So what are you experiencing right now on the good side of the tax season? And then what are some of the bad things that you are, I'm not going to call them bad, things that we shouldn't be doing and preparing for the next year of taxes? Because it's too late now for 2023 almost. Well, for 2022, should I say.
Okay, awesome.
Yeah.
I would say, and it's funny how I'm last. You know why? Because after y'all make all this money, it's the tax lady.
That's why I left you last.
That's why I was last. And they let Chris speak first, right? Because Chris makes y'all money.
Exactly.
And then y'all go to the tax lady. But that's
Man.
one of the. I would say what I'm seeing that is really, really good right now, especially for traders, small businesses, is that some of you got the picture, right? Budgeting is so important. So just like Lawrence said, cutting costs is going to be very important in the next 2, 3, or even 4 quarter. So I would say budgeting has been something that I've been really, really implementing when it comes to our small businesses, when it comes to our traders. A couple of years ago, we were making millions in the stock market, and then in a year we would be broke. Reason why is because we didn't really have a good relationship with money. So one of the 2 things that I'm really implementing in my community is the relationship of money, how to budget, how to cut costs, because cash flow is decreasing, right? And as cash flow decrease, we need to also look into budgeting. What I'm finding that is that's becoming really a headache, I would say, is we still don't understand the idea that taxation is throughout the year. Taxation is not at the end of the year. And one of the biggest point when it comes to taxation is tax planning. So it's so important throughout that mid-year. I'm saying, hey, if we're projecting that you're going to have a high tax liability, I need you to see Christopher. We need to talk about, pre-tax contribution. We need to move this money. And if we're looking at, you're projecting a low tax liability, then we need to look into budgeting. So I would say tax planning is such a big key when it comes to throughout the year, when it comes to taxation. 2 things I would probably say, traders, that one of the things that I'm seeing is that our day traders are making a lot of money, but then they're really paying IRS back 60, 70, even $100,000 because they didn't plan throughout the year. Now they have a high tax liability. They're not moving that money into pre-tax contribution. They're not trading. They're trading under a social instead of an EIN, and they're getting upset. And that's, again, there's no tax planning. So you do need a Christopher in your life. You do need a tax person in your life throughout the year that is looking at your financial reports and that is saying, okay, these are the choices you have. These are the decisions you need to make, and not wait till December 31st.
No, Abby, that was great. And that was the reason I brought you on last, because, what I'm seeing, and, Mark and I talk about this, I talk to Lawrence sometime, and, Lawrence just goes straight, that's just cap, and I see people out here posting all of these games, they're making all this money, and, I'm not going to question any other person's account, but Photoshop is a wonderful thing. But anyway, I look at it and I just say to myself, no one, is it smart to be posting all of this, I'm making $400,000, $1 million, online for everybody to see, number one. Number 2, from a tax perspective, and maybe you and Chris can kind of double team on this and just say, if you are somebody who's that good, I'm not going to question anybody, and how good they've gotten over the last 4 or 5 years. But if you're making $4 or $5 million all of a sudden day trading or more, okay, how do you keep the majority of your money? Because if you're just trading every day, and you end up at the end of the year making that kind of money, how did you keep it and not give 50% back to the tax man?
Exactly.
So Chris or Abby, anybody can help us with that one.
I would,
Brother Charles, could I interject if you don't mind?
Yes.
So you touched on something, and this has nothing to do with financial. Well, I guess it does have to do with financial preservation and your safety. Okay. It is very dangerous to be posting your wins. I've actually been warning, Mark, you can attest this, I've been warning people for the past 3 years not to post your gains online for several reasons that you touched on, Uncle Charles. One being taxation. If you're ever audited, the IRS looks at all your social, right? So they're like, here it says that you only gained $100,000 in your portfolio, but according to IG, where are the other $2 million that you're hiding?
Exactly.
Oops. Part 2. And Uncle Charles, you live in Lawrence, you live in Atlanta.
Yep.
The follow home robberies are real. Sandy Springs, you have several people in Atlanta. Yes. You have people in LA right now. It's having a huge issue. They had over 230 follow home robberies. And what that is
Yep.
that you check into a nice restaurant, you go down Rodeo Drive, you're chilling in Melrose, you're
Yep.
spending a certain amount of money in
Yep.
the LV store. The people that work, the security guards at the store, man,
They
someone that's
follow
bought, $10,000 worth of bags. This is the car that they drive. Someone valets their car in a nice restaurant in LA. They'll put a little air tag on the car. Like, all right, I dropped it on the car. They're drunk. And then the goons or whomever is out waiting for you to exit, get in your car half drunk, and people are following you home and sticking you up. This is not a cap.
Right.
You could go on YouTube, you can search LA News, you can search Atlanta. They just arrested about 16 guys in Atlanta and Sandy Hills that were targeting social media influencers, professional athletes, etc. So not only is it dangerous from a tax perspective, because the IRS will Google you, they will go on your social, they will pull that will come up in the court documents for your audit. And then B, the streets are watching. One thing that happened during COVID is that common criminals became less common. They actually became very sophisticated. They're getting all these tutorials on the dark web on how to hack, on how to scam, on how to do fraud. They're mixing that now with technology, but they still got the same fearlessness that they once had before COVID. So again, just a caveat to the viewers, I've been warning people for 2 to 3 years. Now this is really coming full circle. People are even losing their lives. So you don't get anything from this conversation about wealth preservation. How about some self-preservation and be smart with what you're sharing?
For sure. Thanks for that, Brian. Glad you broke in. Yeah. Now, Chris, go ahead. I know you were gonna say a little something about preservation and how we keep some of this money everybody's making. 5, 10, 15, $20 million in a year. So how do we do that?
I think we're on the lines on the tax side. I think Abby kind of touched on it. A financial plan is not one day of the year, right? A financial plan is throughout the year. When we even look at corporations, we look forward to earnings season, right? Well, again, companies are reporting their numbers throughout the year, every single quarter. They know exactly what day they're going to report earnings. They're going to have a big call. All the attorneys are going to come together, and you got to ask yourself, okay, am I managing my money like a corporation? Right, we're always in this space of trading, right? So we should be more attuned to what's going on as far as, okay, well, I understand the first quarter, we got March, but we're about to enter, right? So first quarter is almost over. So what does your overall financial plan look like? How much, if you made a bunch of money trading, if you made $5 million trading, well, did you set aside 20, 25%, 30%, honestly, right? 30% if you're trading it, right? If you're not using specialized tickers that have more tax efficient, did you set aside that money in a separate account? Right? Are you utilizing your different retirement strategies? Right. So I think that's the part that we have to look at up front before you even say, okay, I know I'm going to make all this money, but what does your overall plan look like? And if you don't, that's when professionals do come in place. Like everything doesn't have to be do it yourself. Right. I know for me, I'm a financial advisor, but I actually have a financial advisor for me. Right. Because there's some things that I may overlook for me that I need somebody else to make sure I'm looking over my back with my business. Does that make sense? It's not just again, Michael Jordan had a coach. LeBron has a coach. So it's every single person needs great professionals around them to make sure they succeed well. All right, especially in this game.
Yeah. Abby, anything you want to add to that?
I mean, I agree 100%. I have a CFO. I'm an accountant and I have a CFO. But if you do have that mass, if you do have that much money, I would highly recommend that you use STOP. STOP is considered of savings, tax, operation, STOP, and profit sharing. So you do actually have an account for taxation. You do have an account for saving. You do have an account for operation. You do have an account for profit sharing. So when you use STOP, at the end of the year, you're not so stressed. You already been either paying your taxes in a quarterly base, or you actually have a tax account so that at the end of the year, you're able to actually just pay your taxes. So I highly recommend using STOP.
Great. So now we're going to go to the queen of the show, Miss Jolene GC.
Hey.
And my question to you, as being the lady of leisure.
The first. Okay.
I was waiting for it. I was like,
excuse me, the first lady of leisure. The past 6-12 months, what's been the heaviest on your mind seeing what's going on in the market, knowing that you became this lady of leisure, and what have you had to kind of adjust in your life, if anything?
Mm-hmm.
As you see inflation is high, you hear people complaining about shopping and going places and things are just, through the roof. What are you observing out there? And what would you give back to the people that you would say, here's a piece of advice that I will leave you with?
Excellent question, Uncle Charles. Well, first of all, as the First Lady of Leisure, the way that I relate to the market, wealth building, is from the perspective of leisure for me personally. So, leisure defined is the opportunity afforded by free time to do something, right? But the refined definition of leisure is the opportunity afforded by who? Our ancestors, to the freed up time. Like, what are we doing with our freed up time? Well, during our freed up time, you create value. Hold that thought. I'll get back to that. And then third, to do something. It's either to do something or to be someone. So that is like creating value aligned with the truth of who you are. So for me, seeing this market, how it is and how it's been over the past 6-12 months, is not phasing me because my source is not in the market. So what I mean by that is, I told you to hold that thought on creating value. So for me, creating value, the three main ways to create value within the context of leisure is one, investing. So that's one option. And that can be investing in other businesses. That can be investing in yourself. And obviously that could be investing in the market, whatever vehicle, makes sense. And then two, it's having your own business. So having a vehicle for your creativity and your creative expression. And then three, it would be laboring intentionally. So many people, just labor. There's no intention behind it. You're just out there working because that's what you think you got to do. And for me personally, I am in a different paradigm.
Right.
Many may be in a labor paradigm. I'm in a leisure paradigm. So things are different for me. So some of those adjustments that I've not even had to make, but I've had the opportunity and choice to make, is under creating value. So my focus has been on creating value. And what that looks like is taking stock of like, okay, so over these past 6 to 12 months, like what have I learned? What are these lessons? And lesson has two S's. When I see S's, I just think dollar signs. So lessons is spelled LE $ON with another, dollar sign at the end. Lessons. Okay, so that's money right there. So for me, it's been more so about using my gifts and talents for accumulation. Now, the market's going to do what the market's going to do, right? So for me, as the market was, acting up, the shift became more so about, okay, taking those assets that, generated so much during those, 2020 and whatever, and where is that going to be? Where are those dollars going to shift? So now it's in other businesses. It's in like my own whatever projects that I have going on. So the adjustments really have been in this mindset shift from labor to leisure, which I've been on this leisure side for quite some time. And so when I see these markets doing what they're doing, it doesn't faze me, it doesn't shake me. The only thing that's going to happen really is that I'm going to make more money. Like that's period. Like that was decided. I always say that money is inevitable. Once your wealth consciousness expands to a point, it's just like money is going to be there. So even if the market is doing something, the wealth is inside of me. I'm the wealth. I am wealth. So when I talk, like I'm talking right now, this is $1 billion conversation. Money, money, money. When I talk, the way I talk is all money centered. It's wealth centered. So if I get into that realm where the market, again, is not doing what I want it to do, it doesn't faze me. Yeah, I can see red in a portfolio, but when I think about how I started with under $10,000 and grew that, like what, like how, like why would I trip? If I did it once, I could do it again and again and again. And then what other thing is that also impacts that is just like, I'm not doing this just for me. So whatever I do multiplies. Okay, like what did God say? He was talking about those manifold blessings, the kind of blessings that they're so big you got to fold them.
Yes.
Like, that's the realm that I'm in. So when I do something, I know that it's going to impact somebody else, and then that's going to impact somebody else. Like Mark and I, we used to always say we're closing the racial wealth gap, right? That's what we're working on. And it's like, well, hold up, because now we had to sit back and think about it. Does that really make sense for us to be doing? Well, no, it doesn't. First of all, we didn't cause the racial wealth gap. That's not our mess to clean up. Right. And so, and this is in the context of creating value. So the value's not there. If you focus on, the gap, that's all you're going to see is the gap. You're going to see deficits. You're going to see debt. You're going to see lack. You're going to see inadequacy. You're going to see all those things. But the shift really gets to come to building a wealth ladder. We are building rungs on a ladder. And I was talking to a really good friend of mine, and this was just before this, a couple hours before going live. And we were talking about, like, when you build a ladder, other people can go on that ladder. It's not just you. So thinking about the market and what it's doing, like, to put it quite frankly, is beneath me. I don't have time for that. Like, I see it. I see what's going on, but there are other rungs. There are other things. There are so many ways to create money. Money is everywhere. Money is inevitable. So, that's how I feel about it, Uncle Charles. Thanks for the question.
I appreciate that. And you just said more than a bar. And what I love about this group, I'm looking at, all these faces on here.
And, smell like money in the room.
It does. I see money all over this room. I look at Mo. Mo hair is never out of shape. Man. You can tell he just got a fresh cut.
Ever. Ever.
Abby always got the hat tilted just right. Lawrence looked like I'm always just thinking about money. Everybody, Chris, that that $1 million smile. He's just sitting up here. Yeah, I'm just counting, more and more money coming in. So I love the way we put this together. Brian is going to help lead us in the future here when we get back into IPO land. But Mark, what I want to do is bring it back to you. I know we only got about 15 minutes left. Just what's next? I mean, we're going to continue the executive education, for the rest of this year, which I really appreciate. This has been great. I feel like I'm back at Duke getting my MBA all over again. So I can definitely take this refresher course that you and Jolene are giving us. But you got the Panther on Monday. You got Mark and Mo bringing us stuff on Thursday. And what kills me about Thursday, they pre-recorded their show.
Oh, wow.
And people actually thought they were live for a moment till Mark had to say, we already talked about this. It's pre-recorded. That's why it's perfect. I'm going to call you out because it was a perfect show. Perfect delivery.
He's going guns blazing tonight. Okay.
Bam. Great show, though. Okay. But as we go into 2023, Mark, what else you gonna be dropping, man? Because I hear, some rumbles that there's some other stuff coming, and I hear that Thanos glove popping. And what you got for it?
Well, the Thanos glove has multiple gems on it. So, like, if we're looking at it in perspective, there's like X amount of, like, what is it, 6 Infinity Stones on here, and so the goal is that essentially that we take up 6 days worth of value, and then of course kind of like rest on a Sunday for everybody to just be able to relax and kind of like just debrief and everything else. We can keep it here on the screen as it is, so that way everybody can see everybody, because I like seeing everybody's faces. And so here's what's coming, because you've already known about the 3 shows that are already in existence right now, but there are 2 other shows that are coming. One, the Cap Table, which will be hosted by none other than Mr. Brian Clayette. We expect that to be taking place, I think, this month. Am I correct, Brian?
This month we'll launch the Cap Table, kind of all things startup, angel investing. And it's a bit of a double entendre because we know what it means to cap. But the Cap Table is kind of the source of truth, meaning that it shows all the shareholders, when those shares are vested, how much equity they actually own in said company, at what valuation they buy into that company. So again, just as we intersect, to Jolene's point, the only way to get money is not from the stock market. There are a million ways to make $1 million. So the idea here is to kind of introduce the family, the cousins, into the private sector. So you make your money way before the company even goes public. And there's huge amounts of returns to be had there. Just for an example, a context, I'm not sure if you guys have heard of the author Tim Ferriss, multiple New York best-selling books. I think he's published about 5 bestsellers, New York Times bestsellers. He made more money off his $25,000 Uber investment than he did all his book gross sales. I think he took a $25,000 investment and grew it to $25 million when they went public. However, it took him about 7, 8, 9 years to get that return. Just imagine taking $25,000 and having to be $25 million in a matter of 8 to 9 years. So the huge amount that we haven't even touched on as we add additional rung to this wealth building ladder is the private market. So that's what the cap table will be bringing in founders that look like you and I, melanated founders, female founders, Black and brown founders, hearing their stories. Some of their trials and tribulations that they go through as founders to try to raise capital. We also, will give some exposure to some of these businesses and maybe give some opportunities for angel investing on some of those opportunities. So very excited about the cap table. And without further ado, Mark, I think there's another show that we're going to be adding to the portfolio soon as well. Talk about that.
Yes, I am. So the other show that we're bringing to the table, and I think that they get started, if not tomorrow, this week. I think it's tomorrow. Am I correct? Is it tomorrow or is it next week? I don't want to pull the cat out of the bag. So please correct me if I'm wrong. But okay. So without further ado, we're bringing Abby and Chris together to co-host a show called The Red Line. Chris and Abby, do you guys want to talk a little bit about that show? Like, what should we expect from such a show like The Red Line?
You're on mute, Chris.
Okay, cool. So I think Abby's waiting for me to talk, huh? So I think she was like, I'm not saying nothing until he says something, right? So I think, I think our show is going to be powerful, man. It's really going to be a combination of two worlds coming together, with her from the tax standpoint, me from the financial planning standpoint. And I really want to take people through that full journey, right? Everybody, we talk so much about trading stocks and we talk so much about what to pick, but what does your asset allocation look like? What does your overall plan look like? What does financial independence look like for you, right? And again, we all talk about those as kind of like catchphrases, but there actually needs to be a plan in place for you actually to do that, right? There's steps that you have to go through. There's things that you need to have in place, not just with your stocks, but what about for insurance, going over trust, how trust fit into your plan, going over how real estate fits into everything, right? Guys, there's so many things from a financial planning standpoint that I work with my clients that I need to share with you guys so we can be better equipped to make sure that we can last through any difficult times, right? Everything is great during a bad market. I'm sorry, then a great market, then a bull market, right? Everything is great during a bull market. We're all making money, where everybody is excited. But so it really thinks about in 2022, this is when you really needed a financial plan, right? This is when you really needed steps in place, right? So that's what I want to bring to the show every single week is as we're going to have some real keys that you can actually implement from a financial planning standpoint. And then, of course, Abby, she's going to kill it on the tax side, and she can kind of talk about what she plans to bring home.
I'm looking forward to literally collaborating with Chris and making sure that you guys actually have the full package. So if you have a tax accountant, a tax strategist, and you have a financial planner, you pretty much have an amazing package. And that's what us two going to bring into the table to educate you guys. And not just, we're not trying to make you a financial planner or an accountant, but we're going to bring some awareness. It's important to understand your tax return when your accountant completes them. It's important to understand what's in front of you, not just signing documents and getting audits, not even understanding why you got audits. So I think Chris and I are going to bring fire to you guys. I hope y'all ready. We ain't playing.
Now, that's what I like to hear.
I want to speak on something though, real quick, because we're in the last 5 minutes.
Yep.
And I want to hit this, and you guys know me well enough to know, there's been a lot that's been said within the community or within the culture or across different media platforms and everything else. So and you guys know, I say what I say and I move on. And I I definitely have to give a huge shout out to Mark for definitely putting forth, the content on his channel where he talked about like, some of the things in which that we see, which can either be predatory or culture vulture. And so here's what I'm going to say, and feel free if anybody else wants to, like, if this becomes a short discussion, but here's what I'm going to say. And I can only speak on behalf of me, and I can only speak on behalf of what is it that we are building here at the Come Up series. What we believe is that in each and every single one of these individuals that you see on this screen, we don't know if Uncle Charles will have his own show on the Come Up series or not. So, he's, you never know. But here's what we believe here. And every single one of them will tell you they all have the same conversation with me when they first come onto the Come Up series or when they join the Come Up series family. It's about one, educating each and every single one of you, whether you're at home or wherever you are, and making sure that we consistently try to bring value to you that you can literally go forth and either put into knowledge or actually put into action. That is always and forever our purpose here at the Come Up series. And I've said this before, where if you need to look at other sources, there's nothing wrong with having multiple sources. Like, for example, there's other great channels out there, like, the Plain Bagel, where he definitely keeps it very simple, very plain. Other platforms like that. And then, of course, Shadows from Above. He also does he also does some pretty good content as well. The reason why I say this is because it's the fact that, if you ever need to look for anywhere else, start here and look at that as whenever you look towards anything else, compare it as it pertains to the standard. We don't charge you for anything. We don't have a problem with people like having people charge for their time because we understand that they put a lot of time and effort and energy into what they do. But we gotta get to this point now where, and this is no shade towards people who are entertainers or rappers, athletes, because, by all means, you put your time and effort and energy towards whatever it is that you do. And I strongly believe that they can also do other things in life and become great at those things as well. But stop looking towards just because of the fact that they have a celebrity. A celebrity endorsement does not mean that it spells out success for you in the future. Look at it as it pertains to the true value that's coming through. And also, you do the same thing every day that you go shopping, or when you have to either go buy a house, or when you have to make a strong financial decision on behalf of your family. You have to look at it in the sense of, what I'm paying for, does it provide the necessary value that will ultimately either equate to, or essentially will it not equate towards what is it that I'm paying? If you think about the person who spends, let's say, 8 hours and they accumulate X amount of dollars, but then you go spend it towards something. Now, will that equate towards, say, for example, what your job can produce or not? And so I always say, like, keep the main thing until the other thing can supersede the main thing. If you understand and read between the lines of what I said there, when the main thing is the main thing, that's kind of like the rat race that everybody's trying to get out of. When that side thing can supersede the main thing, that's the passive income that can supersede the main thing. And so when you have folks out there that are literally giving you tons of eloquent speech or giving you tons of, just throwing in, oh, well, we have this rapper on stage or we have this and everything else, look beyond that. Look towards the actual value. Look towards the actual details as it pertains to what is it that they're giving you. Because, Jolene and I will tell you, we don't bring a bunch of celebrities here on our channel. We don't do that. We bring people who are willing to come onto this channel that are willing to actually teach you something that actually brings forth value. Uncle Charles, you asked, what's the future of the Come Up series? With all of this that's coming forth, my goal is that I would love for there to be a fund later on down the road where people can actually have access, people who look like us all on this stage right now, that people who look like us can literally be able to invest in those companies at their early stages. Brian said it best, the person that put in X amount of dollars towards a company, and then 7 to 8 years later, now they're a millionaire. Now they're like able to do multi-million-dollar deals. And I've seen that happen on multiple different occasions by reading news and seeing it happen for other people, as well as like seeing what's happened within my own particular case. And I want that to be for everybody else. But how do we get there? It starts here by having a core foundation. And look at what you're getting. You know, Monday Night Take, you get strong trading information and investment information, as well as economic data. And then pretty soon also getting in not only the economic data, but you also get jobs data that like, where are the jobs at? Where does the money reside? Then you got the Come Up series, which, you know, like, yo, we are all about like literally that elevated education. Like it's always about in the sense that we're going to challenge you. Our goal is to make your head hurt. So that way, essentially, it's like, okay, hey, that brain is actually moving forth in those muscles that you can actually apply it either at your job or when you're looking at your next move. And also when you either start your own company, you know exactly what to do. You know what to look for. And even as an investor, when you look at financial advisement and taxes, now you actually have an idea and a blueprint of how to move. When you look at like having those discussions on a Thursday with Mark and Mo, now you get somewhat of an unbiased, well, not even somewhat, you get an unbiased opinion. You get something from two different sides that literally starts to marry an idea together where you have either a bearish or bullish side where it's not one-sided. You know, that's something that we look at that's well-rounded. And when we bring on a person like Brian to look at startups, that's opportunity.
Right.
You know, think about it. The last startup that we brought onto this show raised $1 million in capital because of what they did here on this show. So there is value here because of the fact that we do not sling any BS. We're going to challenge. And we're going to make sure that whatever comes onto the show is 100% pure value and education. We're not here on that vulture play. We're not here on all that other stuff that you hear about on social media. For me, all that stuff is for the birds. I've kept pretty quiet within the shadows as it pertains to what's happening, you know, because of the fact is we're not that type of channel. We're not that type of network. What we are about is making sure that you at home, you the viewer, have the opportunity to learn and also execute moving forward.
No, Mark, that is great. And I know we're at time. I like to respect Jolene's time. I know it's dinner time, you know, on the West Coast. So, you know, she's giving me the look. So I'm trying to be as expeditious as possible. The other thing I like about having Brian on the show, we're going to learn some big new words, too. Because, you know, when that man speaks, he's so eloquent, you know, when he's speaking. So I'm really looking forward to that. But, you know, Mark and Mo, I'm just going to say this, man, you know, I knew Mark, you know, I'm now, you know, watching Mo, I love what you guys bring to the show. I love what everybody here is bringing. And I'm going to speak it into existence, Mark, what you just said. You know, I want to see us in these IPOs, you know, that Brian is talking about. I want to see us, you know, start a hedge fund or whatever it may be, you know, that Chris may bring forward one day to help us get going. You know, I'm just going to put it out there. You know, I want those ladder rungs to be built, you know, that Jolene has talked about, you know. So I'm going to
hold on. Is it one day? Is it one day, Chris? A hedge fund is one day going to happen?
It's going to happen on a Wednesday. On a Wednesday.
One day going to happen, or does this already now exist?
Hey, we coming.
Okay.
You say we coming. We're going to leave it at that. And of course, you know, Abby's going to always keep us in line with the taxes, you know, to make sure we know how to keep our money. And, you know, Lawrence is going to keep us, you know, straight. Because like I said, the first time I saw Lawrence was in little 5 points on the corner teaching people, you know, how to trade stocks on a whiteboard. So I was like, wait a minute, who is this guy out here teaching people how to do stock talk like this? So I want to say thanks for letting me host this tonight, Mark. I really appreciate it. There's some more things that I'm going to bring from a corporate perspective, you know, that I'll be able to share here, you know, at a later date. You know, everybody gets to their wealth a different way. You know, some people been telling y'all to leave y'all jobs and stuff, but I can tell you right now, my 20 plus years in corporate has made me and my family very comfortable. If you know how to do it, you can do that. Okay. But I'll turn it over to you, Mark, to close the show, or Jolene, and we'll go from there. The Corporate Crusader. Thanks, Vic. I appreciate it.
Well, Yo, thank you guys so much for giving us your time, your energy, and of course your knowledge. You know, it's definitely invaluable. I look forward to the wonderful things that you guys will, you know, for the folks that have been here for a minute, I look forward to more great things in which you guys are producing. You guys are doing a phenomenal job. And then on top of that, to the newcomers, I am really, really excited for what's going to be coming forth, because I know that you are all excited to literally get it out there and to be able to teach people. And that's really where the real passion is. And ultimately, passion led us here. Jolene, thank you so much for rocking with me and doing this every single week. Because, and did you know that we just made it to our 4-year anniversary as it pertains to doing this? Like, if you take in Facebook time, then that's officially been 4 years of us doing this. So, you know, it's kind of cool. And being able to be on this journey with you, it's been very much so well worth it. And I thank you for pulling me out to like literally make this happen. So shout outs to you, Jolene, always. Without further ado, until next time, be sure to like, subscribe, and comment down below. And we'll see y'all in the next one. Peace, y'all.
Peace.
Peace.